Ladies and gentlemen, welcome to the next edition of AmiSights. I'm Ami Kassar, your host, and super excited to have my friends Jason Kruger and Pete Hill with me today. They are principals of Signature Analytics, a smart choice for outsourced accounting services in San Diego, who work nationwide. But we're not going to talk too much today about their company, but more so some of the experiences they've seen with clients. But before we start, why don't we get to say hello? And Jason, why don't we start with you and just introduce yourselves and tell us a little bit about your background and your story. And that
Sure,
beautiful
thanks.
that beautiful picture in there where we're seeing through
Right.
that window, and if
Well,
that's
this is
real.
where I'm sitting right now, of course, right? Um, no, thanks for having us on, Ami. Jason Kruger, as you mentioned, my personal background is in accounting, public accounting. I spent close to 10 years in public accounting, most of that with Deloitte, which is obviously one of the big four global firms in the San Diego market. And the San Diego market, as you know, Ami, is filled with small and mid-sized businesses. There's only two Fortune 500 companies here. One of them is our utility company, and the other is Qualcomm. So it's all small mid-market. And what I saw back then and continue to see now is just the need for these types of companies in the small mid-market. They deserve better than what they're getting. And what I mean by that, as it relates to accounting and finance, is a lot of them are looking at accounting and finance as a necessary evil. And what we want to do is educate them and show them how accounting and finance can drive value to their business. And so we created Signature Analytics in 2008 with that idea in mind. Spent a number of years flying by the seat of my pants, trying to figure it out, bringing in, doing a little bit of everything. Over time, Pete joined us about 8 or 9 years ago as our CEO, and we've built it up to about 75 plus employees, servicing clients all over the country now.
Love it. Pete, say hello. Tell us a little bit about your background.
Yeah, good morning. So I think that's one of the unique things about us, right? I'm not an accountant. And so one of the reasons I think Jason brought me on board and we partnered was to bring a different perspective to the company. So my background is in growing service firms. Actually started out in construction and then went into consulting from there. And again, joined Jason about 8 years ago. I think what we've done is we've always focused on looking at the business and the CEO and how we support them is a big part of our approach. And I think, as you know, Ami, some of the stories we'll talk about today, we're not working with the smaller startups. We're really the next stage for companies. Typically, our clients are 5 million to 100 million in revenue. So that's the size of companies and the teams we're working with.
Okay, guys. So in our work, we see it all the time. People come to us for financing, and their books are a hot mess. Their taxes don't match their books. And deciphering they blame the bank because it takes so long to get the financing. But really, there's 2 months of deciphering the mess of their bookkeeping and their accounting before we start. Now, what I always tell people is you can survive that if you don't need the money in a hurry. But if you need the money in a hurry or pretty quickly, you're going to have a fundamental problem if you have bad bookkeeping and accounting in order. And that's one of the risks that we see all the time. But what I would love for you guys to dig in with us and maybe share with us some war stories today, or for our listeners, is you have called in, I'm sorry, probably a couple hundred times over the years to look at and review and dig into the accounting or the financial systems of business owners, of entrepreneurs. And you've probably seen some crazy, scary shit. And what I want to know is, I want our listeners to really understand, because for many of us, we're super busy, we're good at our trade, and we don't like accounting. I always say, like, It's like going to a basketball game and seeing the players run around the court with their shoelaces untied. Okay. But entrepreneurs don't like accounting. They don't like bookkeeping. It's a pain, but there can be all kinds of unintended consequences. So Jason, why don't we start with you? What's one of the craziest things you've ever seen?
Yeah, and I'll add to that too. To your point is, um, you get to a point where it stunts your growth. If you don't have the overall infrastructure there to support that, your growth can be stunted, and you're not able to achieve the goals. So yeah, we've seen a little bit of everything. I think when we go to clients, or a lot of times we get brought in after the fact, right? And I think a lot of companies that have a very common situation that we see is a number of companies that have one person managing all of their accounting, and they think, okay, well, I'll just hire this one person, they'll do the accounting, and I'll go run my business. And maybe they can get away with that for a while, and then they grow and things become more complex, and that one person starts, there's a couple things that happen. One, that person doesn't have the skill set to manage the growth of the business and what's really happening. But the other is, and what you're alluding to in some cases, Ami, is that person now has full control over everything going on with the business financially. And so I've seen situations where if an individual has control over the accounting, writing checks, invoicing, and payroll, I've seen situations where that individual has given themselves a raise because nobody knows the difference, right? So give himself a raise. There's a situation that happened in San Diego here with a nonprofit. Actually, it's in the news, San Diego Economic Development Corp, where they had one person in charge, and that person was over a period of a couple of years took about $500,000. And they do that. It's pretty easy if you're just the sole financial person for a company. You can create a dummy vendor account and start cutting yourself some checks. You can. I've seen situations where individuals will claim expense reimbursements and pay themselves through expense reimbursements. And if you have full control over the accounting records, it's easy to put that in and divvy it up into different places, different accounts where management would not know the difference. And I would say that companies that have inventory are probably at the greatest risk of fraud from their financial bookkeeper or accountant, because inventory can be a black hole from an accounting perspective, right? I mean, who we see a lot of companies, if in the small business, 90% of companies that we look at, their inventory is not accurate. And so that can be just a black hole where things can be plugged, pushed away, put in cases that nobody knows the difference. And so you can't even see it really when you look at the financial records of what's happening there. And those are some serious risks if you just have one person overseeing accounting.
Let me riff on that a little bit too. We had a prospect that had an individual that was so tied into all the systems. They just relied on this person so much. They had, they were the only ones, frankly, that had the password and connectivity to the bank accounts. They had, they were the only ones with logins to the accounting system, the ERP, et cetera. And so the risk of that individual was so great, and they were underperforming. There was issues with them. And they were at a quandary of how to even remove that person from the organization because they had access to everything, and the damage that individual could do if they left in a bad way was tremendous, right? So we see that, especially with smaller businesses relying on that individual, and that creates all kinds of problems. So at a minimum, CEOs should be involved and at least have a backup password, access to everything, so they're able to control that and be able to bring in someone to take over.
Yeah, the biggest situation I've seen is where we came in after the fact, where an individual had stolen about $5 million over about a period of 3 to 4 years. And they did that by giving themselves a raise, for one, but through the expense reimbursements through payroll, and then pushing it into inventory because nobody knows anything about the inventory balance on the balance sheet. And so ultimately that person was caught through a bank audit, Ami. I'm sure you'd be proud of that. The regular auditors, they had reviewed financials, did not even catch that. If they would have looked at a payroll journal, you would have seen $20,000 a pay period going out to expense reimbursements and probably asked about it. But that individual actually ended up getting caught and actually was put in jail.
Let's dig into two pieces about what you guys talk about. One is that as companies grow and evolve, their bookkeeping and accounting and finance needs evolve. And not only potentially for the internal people, but the external people that are out there helping them. And how do you know, like, I think from our perspective, we way outgrew our accountant, but we were loyal to him, and we stuck around way longer than we needed to until I realized something bad that was happening. Okay. But how do you know that it's just like some people outgrow their banks, okay? Or sometimes people outgrow different resources for their companies. How do you know that the people that are helping you, whether they are internal or external resources, have the appropriate skill set for the size and stage where you are?
Maybe I'll take this one, Jason, and jump in. I think there's a couple points here. One is I don't know a CEO out there that wakes up in the morning and says, I'm ready to change my accounting on a whim, right? That's just, to your earlier points on me, that just doesn't happen. So what we always see are triggering events, right? Usually it's turnover, maybe it's an audit requirement because bank financing or investors or what have you. Maybe they're getting late reporting or bad reporting, which is creating poor decisions. Or to Jason's point earlier, maybe there's a major issue that happens, like a fraud, or they didn't get a loan, et cetera, right? So there's triggering events that we see. So that happens, and that's probably 95% of where we get engaged. The other 5%, to your point, is there's different stages of growth, right? So beginning, you start a business, you really don't need a lot of accounting. You're most likely doing it on your own. Then you wind up growing a little bit, driving revenue. Maybe you're $1 million, couple million in revenue. You have some type of basic bookkeeping. Great services out there across the board. Maybe you're doing it with an internal resource. But once you hit that 3 to 5 million, that's where you need to start looking at, how am I growing this business? How sophisticated do I need to get? And it depends on your industry. And that's where you want to start looking at, what are the reports that I need to drive? What are the resources I need to get to the next level? Another trigger is probably somewhere around 8 to 10 million. And then another trigger is probably somewhere around 15 to 20. Like, those are places where you start to hit these ceilings and you need to change out the resource. What got you there may not be the resource you need to get you to the next level. And that's where we love to go in. And I think we've talked about, we've worked on and are launching an accounting health check that will help someone understand the risks of their accounting based on kind of where they are. And that will help them understand, hey, what we always look at and with every client and every prospect are the people, the processes, the technology, and the reporting they're using. And is that helping them? Is that at a level where they can grow and scale?
Yeah. And there's a level of sophistication that increases as you hit each of these milestones or steps with your business, right? Because at the beginning, you can manage the cash flow in your head. You can look at the bank balance. You kind of know what's going on. Things become more complex. Cash is critical for business, for business, every business, and it becomes more and more critical the more complex you get. So you can ensure that you're managing effectively. You can make payroll, but then also how you are investing back into the business for growth. And then there's a level of sophistication when it comes to financing, and then ultimately you're having to have those conversations and talk about your financials to third parties, right? Where earlier in your business, maybe you didn't have to, or maybe it was just, hey, just print out QuickBooks, whatever. But if you get to a level where you need true financing and the bank says, hey, let me see your financials, and you hit print on QuickBooks, you're opening up a can of worms for the bank to digest, to interpret however they want to interpret it. And so if you have more sophistication and the bank asks for financial information and you can present it in a way that is accurate and give the bank confidence and is presented in a way that creates credibility and tells the right story, it's a no-brainer. The banks love that. That creates credibility just from the presentation, and they'll do everything they can to work with you. But again, if you're just hitting print on QuickBooks and you send them a 3-page chart of accounts, numbers all over the place, inconsistency in the trends, I'm sure you see that all the time, Ami.
No.
Yeah, and not only third parties. I think as you grow and scale, you have a management team. So how the whole management and leadership in the company, how they're receiving and interpreting data and understanding the story of the business is critical. So it goes from a sole proprietor, right? So Jason as the founder and him understanding every part of the business, to now at Signature, we have a senior leadership team of 5. And we're sharing that financial information. So we all have to absorb it, understand it to move on. And if you don't have the right level of reporting and aren't telling that story even internally, you have different people taking different things away from that.
It's one of the things I always try to preach to people is that, when you're building a business, it's not unlike building a house. And in the house, sure, there are the pretty things and there's the furniture and the paint and the colors and the design or your kitchen or whatever, but no good house functions without a good electrical system or a good foundation. And the accounting system that runs your house is almost like your electrical system or your plumbing.
Right.
And if you don't invest the time in it and really understanding it, this whole beautiful house that you're building can just blow up on you or self-destruct without you even realizing it.
Yeah.
And it's not sexy, so people don't like it or they don't like to think about it. But it's the hard truth. So
yeah, I think there's a lot of fear from CEOs about how much of this do I really understand, right? I mean, most founders and business owners, to the points earlier, aren't accountants, right? And so there's a concern that I don't understand this information. So part of what we do as we work with our CEOs and leadership teams is, one, we present the story. We help tell the story both graphically and with the numbers, but then we talk through it and we make sure they understand how the income statement ties to the balance sheet and what that means and what's going on with these different ratios and KPIs. And I think that becomes critical as you scale. You don't need to be an accountant, but you need to understand, I think accounting will help you tell the story of your business, and you need to understand that story. And again, we've seen people who, I don't need those reports. It's like, well, you should really think about it. You should really think about, do you understand what's really happening, or are you still going by gut and looking at, the balance in your bank account? And that works for a small business, but not as you scale and grow.
It's striking to me. I spent a lot of time in the EO community, and in EO community, EOS has become like religion. And I think to a certain extent, maybe in the Vistage community also, but I don't think as much. And EOS can be great, it can be very helpful. I'm not minimizing it, but if you don't have the foundation in place, you can have as much of an entrepreneur's operating system as you want, but your house can come crumbling down without these fundamentals. And I think people jump into EOS and these different operating systems because they're kind of sexy and they're kind of vogue, but they often forget about the fundamentals. I made a post sometime last year. I did one of my sessions, and I do these sessions sometimes called hot seat sessions, which is have people talk about their challenges. And there was a guy there who was like a year behind in his accounting and bookkeeping and major cash flow problems. And he was spending $8,000 a month on EOS.
Right.
And all that focus and all that resource in EOS. And I'm like, come on, buddy. Then in the scaling up world, there's a tool called Cash Flow Story, and I don't know if you guys have ever played around with it.
Mhm.
It can be pretty good to teach people the impact of changes in cash flow. But kind of like EOS and rocks are what you put into Cash Flow Story, shit in, shit out. So if your data is bad or you're putting in the wrong data, your output is going to be bad.
Right. Yeah, I mean, to your point, I don't see how you can be successful in EOS if you don't know your numbers.
That's correct.
That's the foundation of that. That is a major assumption, I think, that is had maybe in EOS that, needs to be verified, I think, because to your point, there's a reason why if you haven't closed your books for a year and you have cash flow problems, those go hand in hand, right? There's a reason for that. And cash flow is the number one most important thing for a business. And so understanding that when we work with a company or a client, one of the first things we do is make sure we understand what their cash flows are currently, and then we project them out, on a weekly basis for 13 weeks. 13 weeks equals 1 quarter, gives you a pretty good snapshot, and then we update that every week. But that at a minimum, understanding what your cash flow expectations will allow you to operate your business a little bit better. Then once you get better numbers, and EOS, you talk about scaling up, and we went through scaling up actually, and I remember where they did the financial presentation, the financial day, but even some of the things that they talked about in scaling up, which is the impact that an increase in your margins of 1 or 2% can have on your business and on the bottom line and on your profitability, and then ultimately on the valuation of your business. And so when I talk to a business owner and I ask them what their margins are, and they say, well, it's from between 45 and 50%. Okay, well, is it 45%? Is it 50%? Is it 47%? What is it? Because 5 percentage points on a $10 million business, that's $500,000. So we want to nail that down to the percentage point. We want to budget for that, forecast for that, and then try to hit it, and even better that. And that drives considerable profitability to a business. And I think what scaling up says is basically, if you have $100,000 profitability and you increase that by $50,000, you've increased your profitability by 50%. And so and most businesses are valued on a multiple of EBITDA. So the more you can increase your bottom line, the more your business is valued at. And that's all through knowing the numbers. And if you know your numbers, then you can have the ability to improve the numbers. If you don't, then you're just kind of winging it, kind of going by your gut.
Just a little bit about checks and balances. The other thing you guys mentioned in some of your early stories were basically fraud. And how does an entrepreneur make sure that they have the checks and balances in there to protect themselves? And I know that's not a simple answer, and that not every situations are probably the same, but also very different.
Yeah, I think at the foundation, again, the biggest risk is if you just have one person doing everything, right? I mean, that is ripe for that person is as nice and as wonderful as they may appear to be, or as dedicated as they are to you. Some of the most dedicated, responsive employees or bookkeepers or controllers for a company they're that way because they're committing fraud, and they want to make sure they have control over everything, right? And so sometimes they can appear to be very dedicated employee when in fact they're stealing from you. So having one person is critical. Is critical, not making sure you don't have that one person. So having a second individual and creating those controls. We talk about controls to eliminate the ability to create fraud. So a lot of it goes around cash, right? So when you pay bills, make sure that You have a second set of eyes on what's going out each week, what's being entered into the system, what's being paid, and there's an approval process for that. That's critical. Obviously, you want to make sure that the bank accounts and the books are reconciled every month. So if you're looking at your financials every month, you can spot trends and changes in the business that are more identifiable. If you're not closing your books every month and you're not producing financials and you have one person, it's a higher likelihood than business owners realize that somebody is potentially taking money from them. So I would say, again, more people, division of responsibilities, and really that's what Signature Analytics does. I mean, we come in there. A lot of these companies, they can't afford, and they don't need a full another person, but we can provide that outsider's perspective to give them that support, make sure that there's the checks and balances, make sure there's the oversight, things are tied out, and give them that confidence that there is no fraud being committed.
Yeah, and even beyond fraud, without having a second set of eyes and expertise in-house, we've seen examples of people not reconciling the bank accounts and checks not being cashed. So checks being sent out, not being cashed for whatever reason. Maybe it's going to the wrong address. Maybe the other entity is sitting on it. Bank account starts rising, right? Your cash flow, you look at your bank, you're like, wow, I got all this cash in the bank. And we've seen business owners make decisions based on how much cash is in the bank, not understanding that they have $1 million of uncashed checks out there that is going to suck that money right back out, right? And so it's also beyond fraud. It's just about understanding your financial position at any given moment and making sure you have the right talent that's looking at that and giving you that advice and understanding.
Mm-hmm.
One of the things we see is that it's extremely difficult for the clients we work with to do forecasts and projections and there's two parts to that. Many of them either don't understand their business model in the first place, or the base data that they're using to build their forecast on is wrong.
Right.
That comes back to the listeners to that foundation point. Is your foundation right?
Right.
Yeah. I have a friend who runs, I think, a $3 million company who, if she wants her financial report, she's got to call her accountant, and it's a 2-week wait to get one.
Mm-hmm.
That's bad.
Yeah.
You need to have financial information also at your fingertips.
Yeah.
Yeah. I mean, I would say there's a difference between your monthly financial package, right? Getting a balance sheet and income statement, and then the metrics and information you need to run your business, right? So as a consulting company, we're looking at our team's utilization, revenue per day, all kinds of metrics that we look at daily to run our business, right? And that's because we use systems, again, going back to technology, that allows us to manage and monitor that. We have a dashboard internally that all the leadership team are looking at. And that's how we forecast out, understand future needs as well as current state. So when we actually get our internal financials, that's telling us what happened last month. We're not making a bunch of decisions on that. We've made our decisions based on our daily metrics. And I would say, going back to people struggling with forecasts and whatnot right now, I think we've seen, the stock market looks great, but we're seeing for small to mid-sized businesses, it's hard out there, right? Post-COVID, a lot of businesses didn't necessarily change their model in a way that they needed to. And we've seen the stimulus run out, the PPP, the EIDL, the ERC, that's drying up. So suddenly what was helping them stay alive is gone. And you see that bankruptcies have been going up, I think, every month for the last 20 months. Like, there's a huge dip after COVID because everybody had stimulus money. That's drying up. Bankruptcies are going up. And so now more than ever, it's important to start figuring out what your baseline is, what your budget should be and how you're tracking against that. And then, a budget is not a standalone thing you do at the end of the year and then track against it. We forecast as Signature every quarter. We're updating our forecast, both top line and all of our expenses. Say, where are we trending? What assumptions did we get right and did we get wrong when we started this, and what's update and what's keep tracking towards where we really are going to wind up this year.
Yeah. And I think, one of the biggest errors I see in a forecast is when an individual takes what they did last year and just adds 10%, right? Well, we're going to grow by 10%. Well, the question is how, right? So how are you going to get that extra 10%? Are you going to invest in additional sales and marketing to get there? Do you have a recurring baseline that shows that you're already there and that you can grow from there? So that is critical, is building that from the bottom up and not from just, hey, we're just going to do 10 or 20% more in revenue, because you have to prove that out in the numbers, which I think is important. And the other, one more kind of, I guess I'll call it a fallacy that you had mentioned, Ami, is the reliance on an individual's CPA to do their accounting and close their books is a pretty big fallacy, I would say. I think CPAs, their job and what they want to do is your taxes. They don't really want to be closing your books. They prefer not to. Maybe they'll do it because they have a small bookkeeper that they work with or so on, but they're not really in your business. They don't understand your business consistently. Like you said, that it takes a couple months. Maybe they'll do it quarterly. Maybe they'll update the financials at the end of the year for you. But they're not in your business. They don't understand your business. And to have that ultimate confidence that I see individuals have in their CPA that they can do no wrong is a very dangerous proposition for that business. Ultimately, you need somebody that's in your business, working with you consistently, day to day, week to week, month to month, that really understands your business, that can show you and provide that value as you move forward. But the reliance on the CPA, they're there to do your taxes. That's what their job is, not to really give you that much comfort over the accuracy of your financials.
So, what should we have talked about that we haven't talked about, guys?
Yeah, I mean, how much time do you have?
Really, what the intent of this podcast is to hopefully get everyone, our listeners, thinking about what's going on behind the scenes, what's going on in their electric system. When's the last time you checked in on it?
Mm-hmm.
Needs change, things change, and with things, we think things are fine. You don't want to call someone like Signature Analytics because suddenly you have a problem.
Mm-hmm.
Like, yeah, you want to find that problem catch that problem before it happens. And that's a lot of what I think this discussion is all about.
Yeah, I will say, as a business owner, what I've observed, taking my accounting hat off, is as you start your business. So you have a lot of entrepreneurs. They start their business because they know their product, they know their service, they can do it themselves, and they can be very successful at it. So they say, hey, I'm going to start a business. I'm going to start a business. I'm going to develop a product, or I'm going to develop a service. And so then they take that and they have some level of success. And a lot of business owners think, okay, great. Once I get to this point, then I'm going to hire a sales guy, and then they're going to go out and sell, and we're going to grow it more. And then I'm going to hire, an HR person, or maybe I'll hire an accountant, and they'll do that, right? And then I can keep focusing on growing the business and doing what I do. And what I've learned is that more times than not, that is not the strategy that works. If you just say, I'm going to hire a salesperson, and they're just going to go off and run and sell, right? So as a business owner, it's so critical to know every area of your business. Hire the experts, but those experts, those people that you hire, they don't know your business like you do. They need direction, they need oversight, they need metrics that they're working against, they need to understand what success means to the company. And so making sure that you know all aspects. You don't have to be an expert in accounting, but you need to learn and educate yourself on how to read financial statements. You don't need to be an expert in sales and marketing. I wasn't at all, but you have to be able to manage your sales team. You have to be able to manage your marketing team so that you're really focused and you have strategies that you know can be successful and you can hold them accountable for that success. And so as a business owner, that's what I found to be critical for success moving forward, is not just staying in my lane of servicing clients and doing accounting, but learning and knowing all aspects of my business helps to build that foundation that you talked about, Ami.
So, guys, where can people find you?
Yeah, I mean, the easiest is probably our website, signatureanalytics.com. It's pretty straightforward there. I'm always up to talk to anybody if they want to reach out. My email is the letter J Kruger, so JKRUGER at signatureanalytics.com. Reach out there. Reach out over LinkedIn. You can find us there as well. But always enjoy talking to business owners. If we can help them, great. If we can't, we usually know somebody that can.
Great. Pete, thank you, buddy. Jason, thank you.
Thank you, Ami.
Thank you.
Great talk and great insight. And we'll be sharing with you more from Signature Analytics over the next few weeks and months. So thank you guys very much for spending time with us today.
Thanks, Ami. We appreciate it. Have a good one.
Yeah.